Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Monday, the 18th of September, 2023. It's an eventful evening, I'll tell you that. We're about 6:15 p.m. There has been apparently a rift between Canada and India, where Canada has just ejected an Indian diplomat that they said was the head of the government spy agency. Canadian government is now accusing India, sounds like something you accuse Russia of, but India of killing in British Columbia, a leader of a sect there. And so there's more to this. This was in the House of Commons there. It was brought up by Mr. Trudeau. So this is a very serious spat. 5 Iranians, let me say this right. 5 Americans were released by Iran today. They did make it out of the country. Now there's $6 billion that the Iranian government can get their hands on. They've agreed to not spend it on certain things. I have yet to figure out how you stop that. But they must have some mechanism in place. Maybe the money sits abroad and they can dole it out in some way. I don't know. They're not telling us what that is. Now, we're less than 48 hours away from the Fed announcement. So we have a trifecta. We have the Federal Reserve at 1 o'clock on Wednesday, first with the announcement, then the press conference. Followed the next morning by the Bank of England, which is expected to go up 25 basis points on its rate hike. And maybe that's the last one. They'll talk about that. And the Bank of Japan is not expected to raise rates, but they're going to be talking about making money not as easy any longer, getting away from that. So there's a lot going on, and you've got to sidestep the landmines. Now, by far, to us, the biggest landmine will be the Fed, and the market's got a 99% probability on the Fed watch page. I blew the number up. I wanted to be certain. I don't think I ever saw that. 99% that the market will not see a 25 basis point hike, which sets the market up for a disaster if one comes in, because initially you'd get everybody unwinding things. The reality of the situation is the market has been saying for so long, and been wrong, by the way, that the Fed is not going to go this far. They've gone this far with rates. That the Fed would be cutting possibly 1 or 2 rate hikes, cuts, I should say, by the end of the year. You're going to get none. And now the market is saying that the Fed will go between 75 and 100 basis points in cuts in 2024. We'll see. What the market has been right on is the stock market doesn't stop rallying no matter what. The market just considers that all good. Now, an event is taking place whereas some of the metals are starting to unwind bearish bets, and they're getting to the point where they're looking at the dollar and saying maybe that was the peak. If it is, and that's both the peak of the dollar itself, possibly, and possibly the end of rate hikes, because the Fed's going to say, you can count on it, that they're going to keep all their options live, and every meeting's a live meeting where they may go higher even if they hold right now. That's what you do. I mean, that's the way you end these things, all right? And they'll say that. Does anyone believe them? The market doesn't. That's why you've got to be careful here. If the Fed surprises, you can get stepped on and stepped on hard. Afterwards, and we hear what the Fed says, what the heck? Then we got free sailing, probably through year end is my guess with the Fed. In the gold market, you are at a battleground. It's now. The market has come back and it is challenging. The 18-week moving average of closes, which is 1937.60. You are trading at 1936.80 right now, so that's your challenge point. If the market can close over that, and ideally the spike that you had back here, then you can say the bias has swung in the market, and until you get back under the lows that you made, and I can even show you where those are, they're right here. This is what I'd be looking at, 1921.60 on a close, that the market has swung its bias to the upside. When you come into the chart action here, the question was, were you going to make a run to this low or find the support in this general area? We talked about that at length. What the market has done is it broke now its downtrend. You had a pattern of a high, a lower high, certainly lower lows, and now with the action over the past 48 hours, you've taken that high out. When you took out that high, you end this downtrend pattern. So what's next? Well, the battleground, if you don't see it, I give up. It's the 18-day average of closes. It went there on Friday. It went there today. It's playing around there right now. The support came in at the lower Bollinger Band. If you haven't taken my Bollinger Band course, you've got to take that if you want to learn my concept on Bollinger Bands as to how the markets go to these tops and magically run out of momentum and the downside. And you couple it with, always with, the slow stochastic reading, but my version of it. And my version of it is different than the standard version. I do make modifications to it. So when I looked at that and I look at it, I see higher high, lower low, narrowing into the Bollinger Bands, probably going to sit tight and see what the Fed does, and then market starts making a move. The gold silver is still stuck in this area that it's been at for a while here. Is silver coming alive? For silver to come alive, you have to do a few things. First, were you ever embedded? The answer is no. You got oversold. Number two, you've just taken the market over this high off the lower Bollinger Band one more time. So I think that in play is the 18-day average of closes to go up there and fight a battle. Now, to get there, you will turn the trend up if it can make that move. Once you clear 23.56 and a half, you'll have a pattern of higher lows, a higher high at that point, and you open the door up to challenge three moving averages, the 100, the 200, and the 18-day average of closes. Number two, when I look at the copper market, the slow stochastic, I don't know how that got pushed like that. I still am not a fan of the copper market. Number one, I don't think China's going to do anything dramatic to help the property market. I don't think they can. I think they'll do everything around it. I think they'll continue to lower interest rates on the yuan. By the way, I would expect that the yuan, if Japan says anything that infers that they're getting away from negative rates, that the yen rallies, and believe it or not, for a while, the yuan can become a carry trade currency where you borrow that, go to South America. Let's assume you pay 3-4% interest to a Chinese bank as you borrow it. And you get 13%, 11% in a South American country. You got a spread of 7 to 9% in there, sometimes 10. Wow. That's what's made the yen such a popular carry trade. Companies, individuals that have massive wealth, you can't do this as the average guy. They go in, they borrow a lot. They've got the balance sheet. They go and they invest it, and they don't have to gamble. They're sitting there with a negative interest rate on the yuan. They're making 13%, 10%, 11% on South American currencies, and it goes. Is there always the danger that something goes wrong? That's always the danger in terms of, will one of those currencies not pay, something like that? But generally they do. They need the international money. The players of this size, they build that into what they've got. In the platinum market, you've got your rally. We're oversold. We started getting higher highs, higher lows a week ago. And I said, looks to me like you want to move up possibly to get back to the 18-day average to figure out what next. It's exactly what occurred, past tense, and you're there. The bigger traders might be looking and saying, well, I'm going to buy it at 937, but you'd have to have a stop under these lows, and that's pretty big. Number two, my concern is, do you really need all this platinum and palladium right now while the auto strike in the U.S.? It's just the U.S. is on strike. That strike is going to spread. You're going to ask me how I know. Because when you close down a stamping plant, you can't get a piece. And if you can't get a piece that's used somewhere else, wherever that somewhere else is in the U.S., another plant, what happens is suddenly the automakers say, hey, guys, we got to let people go on furlough. We can't do anything because of the strike. We're getting rid of 600 people, 1,000 people. I don't know if the UAW took that into account or not. The articles say no. I think Mr. Fain knows that could be the case. I think he's well prepared for it. I don't buy what I read. But it will drain more funds because at that point, they're going to have to give money to those people. So That's a game that maybe GM, Stellantis, Ford, they might want to play. When you look at the dollar index, you've got a fully embedded reading. If it weren't for the report, but there is, and I'm talking the FOMC, I'd be screaming buy this market. I had buy orders out for my subscribers, by the way, recently. I now am going to pull them, and you're going to say why, because I don't want to go through the report. It's really that simple. I'll come in after the fact. I'd rather do that. That's my technique for trading. I don't believe you stand on a train track, you see a bullet train coming at you, and you're so smart, you know you can jump out of the way. Well, let me tell you, if there's a 25 basis point hike, you can't jump fast enough. Market will react. It'll take the market off stride. It may not last a real long time. It doesn't have to last a long time. It could break your account if it goes dramatically in one way, brief or not. So always be careful. I've learned the hard way how to avoid those things, and I do. It's that simple. There's always another trade coming around. And that brings me to what I do in my morning videos. You know, I really would love you to join me. At 6 in the morning, you're looking at my video typically. I record at about 5:15 in the morning. I bring you up to date on world events first. So if there's major U.S. reports, and there generally are, I give you which ones are coming out, what they're looking for, any other news. Then I'll go into did something happen overseas in markets that we should be looking at, and how could that impact all this? And we cover that. Then we start looking at charts. Now, the charts look this way, not blurry, but they'll look that way, the black. I put on more moving averages, more studies on each one of the charts through there, and I start walking you through not only the daily charts, but I'll mix in the weekly charts. And on a weekend, I do all weekly charts primarily, and then mix in a few dailies, because I'm trying to give you both longer-term, shorter-term trade ideas. That's the idea here. How do you get it? It's simple as can be. Number one, when you sign up for it, it's today about the price of a cup of Starbucks coffee for the whole 30 days. You are not committed to anything. You can quit anytime you want, but for that cup of coffee, you're going to get 22 videos, each 15 to 20 minutes long, covering in detail all the futures markets, research galore buried into it. My special reports, when they come out, they're included because you're a subscriber at that point. This is something you might want to take a look at. And I'm going to do more special reports right after the Fed meeting. So be ready. They'll be out probably Wednesday or Thursday. IraEpstein.com, or move your cursor to the very top here. When you move it up there, you'll see an icon. Give it a click. It'll take you right to that area. I'm Ira. You have a good day. I hope you join me. And by the way, you can also join right here if you're watching me on YouTube, because we do post this video on YouTube. You'll see a blue button. Give it a click. You can sign up there. I'm Ira. You have a good day.